Welcome to another live stream, Legends. Well, guys, Bitcoin continues to struggle to gain any ground, and to be honest, I think that we can push a little bit lower yet. Basically, I've been warning that, even after we set these wicks, just like what we were just talking about behind the scenes here, which I'll get into in a little bit, but these big wicks that we see in charts can often be a little bit of a warning that this is where the market is trending to. So a lot of people want to call this a scam wick and think that we can't go down to those levels. I actually look at it quite the opposite, and I feel like we are usually going to fill the majority of this wick. So you can see that I even pulling a fib just to look for the closer targets ever since getting this bounce and looking a little bit toppy, where I took another short, by the way, actually two more short positions up in this level here, basically targeting down here. I mean, I've been paying myself along the way in case I'm absolutely wrong, but I'm just looking at this as, generally speaking, you guys, you know by now that I don't like playing breakouts. I don't like guessing bottoms. I don't like guessing tops. I like that structure. I like those pullbacks, and this would be no different. I don't really consider this that, hey, at this level here, I wouldn't have really considered that we were at support because we're in the middle of a very large range, right? Basically from where we topped to where we currently have our local bottom, that is one big range at this point. So we've just been trading in the middle of the range, and that's why honestly taking any swing positions from where we've been trading the last few days, well, basically the entire week, is dangerous in my opinion. I've only been adding scalps where I'm willing to pay myself quickly and then let some positions run. So yeah, I currently have like 4 shorts open on Bitcoin at this point, from different levels, but willing to be wrong on those. All my stops are in profit at this point and just paying myself on the way, and I will be taking most of my profits when we start getting down to my bullish super fibs. And actually, guys, I shouldn't even say that because technically this is not a bullish super fib. I know a lot of people would pull this and say, hey, here's a bullish one. Technically, we have not broken a lower high, right? This is not considered a lower high to me because basically since we broke our structure, let's say, here was our high, here was our swing fail higher. That means this was our higher low on the trend. And we obviously broke that, even though it was just a wick. And yeah, at that point, you expect some sort of a little bounce. But the fact that we broke that level, even if it was just a wick, that is now a lower low for me. So at that point, that's why I would actually be looking more so for a bearish fib pull, looking at something like this, pulling a fib from here. And this is where you're going to understand where my red box is coming from. But basically just looking at it as any typical how I would pull a fib for a range, basically. And I know these always feel ridiculous, like we can't go back to those levels. These are very large ranges, but I treat the weekly, and this is only the 4-hourly. So yeah, I'm willing to treat the 4-hour very similar to how I treat the 5-minute. And if this was a 5-minute, yeah, although I'm bearish at this point, understand that it's a little late to be looking for swings short as we're getting close to support here. But even if we end up getting some sort of a bounce to grab some liquidity up near all-time highs again, it's still quite likely that we're going to set some sort of a lower high just because we've set a lower low. That, or we end up seeing the same thing we've already got twice, right? The same people got wrecked on both of these, that just trying to basically FOMO into long positions on a breakout of all-time highs. That's where we see those swing fails, right? And notice we got the same thing. So although last Friday's was a little bit extreme with how fast it played out, it was the same setup that we had back here. We already had it once at our all-time highs, right? We had that swing fail, never broke the 115, nuked from there, set new lows. At that point, I would pull a new fib from my highs to where we end up bottoming in that range, and my swing fail zone would again be my 1 to my 115, and we literally got the same setup a second time, and people were blindsided by it, even though we already went through it once. But that's what people's emotions do to you, right? That's why it's important to have a back-tested systematic trade strategy that you can repeat without just feeling like, oh, I think this is what's happening, I think this is what's going on. At least at this point, I mean, like I said, guys, I was entering a short at 125.2k just for the fact that we were in this swing fail zone and it was looking a little bit toppy on the 5-minute. yeah, I still felt like the price looks really strong. We're at all-time highs. Why am I shorting? Yeah, but the risk to reward, as far as, looking at, we were just at resistance again. I would way rather be looking for shorts at that point, because I like to short resistance. I like to long support. And also at the time, I had a long open from down here as well, from the bullish Stuber. So at that point, I was in a very stress-free position that if Bitcoin would have climbed 1% higher, my bearish theory would have been invalidated. But people were so concerned about catching every bit of percent of that move that they would rather, not de-risk, not take profits, not consider hedging a short, even though they just would have had to wait for a 1% confirmation on something like that. So at this point, I could really see the exact same thing happening if we bounce from here, or even as long as we don't set a lower low, basically. As long as we bounce from anywhere in this wick zone, I would expect that we could get something very similar where we test into all-time highs. The invalidation now being above 130,000 for me, right? So it climbed a little because, again, looking for some sort of a fake out past all-time highs with the rejection. So that's actually from about 126 to 130,000 US dollars would be a very strong level of resistance for me. And at that point, okay, if I'm wrong, if I am laddering into shorts in this box here, an average entry somewhere in the middle, and I get stopped out, I don't care, because I know, I actually said when I took that short position, you guys, that I didn't think I would be able to sleep that night if I did not have some sort of short exposure from that resistance level, just because the risk was so tight and I didn't care if it got stopped out. I literally couldn't sleep if I wouldn't have had short exposure while we were at all-time highs there. So it's just kind of a way of understanding, guys, that this is exactly why I always say I literally try to avoid looking at announcements. I try to avoid tweets. Any sort of fundamentals, FOMC meetings even, with rate cuts and stuff. I ignore all that. I literally don't want to know about it because it might cloud my judgment. Because when I go back and backtest, and backtesting is one of the most important things you guys should do when learning how to trade, or honestly, me as well, right? If I have a new strategy, I need to go back and backtest it, but a lot of people don't want to do that homework. But when you do that, you have a more level-headed approach and understanding what your probabilities are of your trade setup playing out. You then know where your take profit levels are, you know where your invalidation levels are, and it's just much easier to approach something like this with a level head at that point. So honestly, I cannot stress enough how important backtesting is, and something that everybody should do. You ever think of a strategy that, hey, here's my 3 rules, write them down. If this setup happens, here's my invalidations. Does it play out? Because guys, here's an important thing about reading the charts and listening to the news, looking at Twitter and that sort of stuff. And people will say, well, yeah, this time's different because this is happening in the news. Okay, but I don't know a single person, including myself, who has ever gone back and backtested chart patterns and gone back to social media and into the news and finding out what's been happening at that time. We don't know, and that's the thing. That's where you can take that emotion out of it. That's literally the point of backtesting, is to take that emotion out of it. So that's something that we should do, and just look at the charts and play the structure for what it is. Because if those fundamentals, if those tweets, if all that stuff is going to matter, because let's face it, it does. I don't want to say those things don't matter, but to trade them is incredibly difficult. And I literally only know one person in my life who trades fundamentals well, and I know several people who can trade charts well. So that on its own, especially if you're trading shorter time frames, the only guy I know who can trade fundamentals well trades a weekly chart. He's looking at things years in advance. He's not looking at the 5-minute and degenning at 50 or 100x leverage like a lot of us are, right? So that's why he's able to do it. But if you're trying to actually trade a reasonable time frame, actively trading with leverage and that sort of thing, you just need to understand basic market structure. And that's why I talk about these lower lows and these lower highs and waiting till those levels are confirmed, right? Just like right now, just looking at this for a very short term range that we have right now, as you can see, I have this little fib pulled. So I actually have a bigger one. I'm going to erase this just to make it more clear. But in this case, you guys, here's a perfect example that unless we basically break above this pocket up here, we are still in a bearish downtrend here, because we had this low back here, and even after all this bouncing around, we did set a lower low. What's the highest point between the two? Right here. This is my confirmed lower high on the 5-minute trend. So that's where I pull my bearish fib from, because I'm looking at where could resistance start kicking in. I would start to expect it if we're going to continue above this Trendmaster indicator resistance. I would expect that Fibonacci resistance would start around 108.8 thousand, and invalidation is basically above 109.6 thousand. So that's kind of how I approach that, right? Just keeping emotions out of it. I don't care what's happening on Twitter. I don't care what's happening on the news right now. It's just, as far as if I was looking for a new scalp short, I would basically be laddering in to a position in this zone here with invalidation tight above here. I shouldn't say tight above there. Like I showed, I leave a little bit of wiggle room, but I don't just go right above the 115 or right on the 115. I leave a little bit of wiggle room, but yeah, I always ladder into positions just like I ladder out of positions. I'm never an all or nothing guy, because that just adds so much extra stress. When if you can ladder into a position, you're going to pull your average entry up closer so that you get a better risk reward, right? If you do get stopped out, your position, if your average entry, if you're laddering in something like that and you get your average entry closer to here, well, then it's going to hurt a lot less if you get invalidated rather than if you go all in on your position down here, right? And I don't mean all in as in your account all in. I just mean like the entire position you're planning to put, because understand that when I'm talking about laddering in, it's not like, okay, here's my original position, I'm doubling down, I'm tripling down, I'm quadrupling down. It's not like that. It's like, hey, I have an amount I'm comfortable trading with. I am going to split it up and ladder it in my resistance pocket. But basically, looking at structure, I entered a short. I'm still in one. I don't have it marked out on here. I'll have to double check my entry. But here's an example of where I took one. Same thing. Is this basically, let me remove the trend master here. I was basically just looking at this as the same type of market structure, right? We had a low back here. We broke that, set a lower low. That means the highest point between the two is my lower high, and pulled down to where we bottomed out. If we end up getting a bounce, that's where I start laddering into a position, right? And then went down from there. Obviously hit a couple of my targets real quick, because I always play the range first. That's also very important. You guys understand that crypto, Bitcoin, everything, stocks, Forex, everything generally loves to range sideways and chop around way more than it's breaking out in a single direction, right? So that's why I always play the range first. Like I was talking about laddering into positions, I also ladder out. So within the same range that I'm trading, I'm generally out of half my position already. And that's the same thing with this Fibonacci strategy that I always talk about, the Stuber fibs. I have my targets on the fibs. So I have my entries, and I have my targets. I have my invalidation. That's why I love trading Fibonacci's, guys. That's why my favorite strategies are Fibonacci's, because it totally takes the emotion out of it. You just have your systematic, as long as you're pulling them the same, right? Because that's the thing too. This strategy might not work for everybody. Some of you might not catch structure the same way, and then you're pulling your fibs differently, and then it's obviously it might end up playing out differently. But again, that's why you do back testing. Make sure that you are looking at things a certain way and things are playing out the way you're expecting them to. But yeah, it just, that kind of thing, guys, it goes so far in trading. The most important thing, because here's another thing I actually want to mention. I was going to mention it this morning in the chat, but I see, and don't get me wrong, it's always fun to speculate. It's always fun to say, oh, if these things happen, these are going to happen. You know, also people talking about the long short ratio, and, you know, just so many things out there that people start to overwhelm themselves. And that's why like I say quite often, I keep my charting simple strategies for a simple guy. Like the more complicated you make things in your head, the more difficult it is going to be trading, and you're just going to wreck yourself more, second guessing yourself on the good setups, getting yourself into bad setups. There's so many things that if you start using them as confluence, Understand that those things are supposed to be confluence. They're not supposed to override your analysis. So that's where understanding basic market structure, lower lows, lower highs, higher lows, higher highs, that sort of stuff is honestly the most important thing that you can learn in trading. And with that alone, you can be profitable. That is the most basic thing that you can ever do. From there, learning Fibonacci's, looking for pullbacks and that sort of thing, that just goes an extra step where you can really dial in your entries and that sort of thing. But basic market structure is by far the most important thing with trading. And then also things like obviously then looking for confluence, right? So I am going by price structure first, and that's why I've been willing to accept the fact we might retest support, right? Actually, let me zoom out a little bit, just because on this time frame you can see it a little clearer why I would have this Stuber fib mapped out here, and where these boxes come from and why I'm targeting them. Basically from where we bottomed on Friday to where we have topped, there's our fibs. That's why I'm kind of targeting this area down here eventually, why I think we can still go down there. But yeah, then looking at things like for confluence, let's say liquidations. I really like this one because it says where the chart could be going. And I mentioned this, you guys, literally a week ago from right now, probably damn near to the minute. I was talking about the fact that we had liquidation levels down around 107,000 and that it made sense that we could go down to that level. I did not expect it to happen the next day, but I did say there was a cluster of high leverage liquidations piling up down there. I actually never had these green ones, the 20x and 10x leverage on this chart at the time, but I've added it now. And look how perfectly we grabbed that, right? I mean, we form that liquidity and we go and grab it. And that's another reason why I think that we could eventually see a bounce here, whether it's right now or we go and test the lows again and then bounce. But let's just remove all my drawings and look at where the liquidity is. I mean, as bearish as I sound, you guys, when we get to support, I am going to not be looking for adding short exposure. When we're at support, I'm going to, if anything, be looking to hedge long, because I see that there is a bunch of liquidity up here starting to pile up, right? And although there's actually significantly more to the upside, but I'm also, there's still a little bit down here, so it's still possible we go grab that. And honestly, if we end up going down here, you are going to see retail starting to really try and short into support, in my opinion, in which case we will see a way more liquidation pockets filling up above us, in which case I think that'll be basically a telltale sign that we are going to get some sort of a bounce after filling the wick, or even some sort of a swing fail reclaiming and then going up for that liquidity. At that point, I'm totally open to the idea of us going to the upside. But honestly, even right now, we could just, like I said, overnight, we could end up just going straight to the upside and going to new all-time highs. That's the thing. We have to be ready for anything. But yeah, basically, just the way that my gut feeling between filling the wick and having a little bit of liquidity forming down here, I think going down towards support and looking weak as hell would draw in so much retail to start shorting right into support, and like I said, start seeing a bunch of more high leverage liquidations above us. And that would be when we could start looking for those bearish targets, and everybody will tell us that we're crazy when we start looking for shorts at all-time highs again in that swing fail pocket. But just notice where all that liquidity is right now. Like, there is these liquidations right up to our all-time high, right? Basically perfectly. So yeah, it makes sense we can go to the upside. That's why I said recently, like this week has been so dangerous if looking for an actual swing trade, because we have been in the middle of a very large range. That's all there is to it. I was talking earlier about the fact that, so I would actually consider this a very valid bearish Stuber fib and swing fail zone. And I was talking about the bullish one at the start. I don't actually consider this a full-on bullish Stuber. Like I said, we might find support down there, but technically not a Stuber fib, because we have, well, basically, however we want to look at it, like I said, high, higher high, higher low. Since we dropped that level, we don't have any lower lows yet where we have a confirmed lower high. I know a lot of people would consider this a lower high. I don't consider it that, because I want to see a new lower low set. Then I would consider the highest point between the two to be the confirmed lower high. So ideally, for me to get bullish and to get a great entry, I mean, don't get me wrong, like I said, I'll be looking for hedges at support, but I would love to see something like this where we do set a lower low and then a very slightly lower low, and then at least if we break structure like that, we have a nice tight invalidation. But just as it stands right now, I just don't like the structure that's there as far as looking for swing trades right now. The only way I'm really going to end up in a swing trade to the long side in the near future is if we come back down to these levels down here, or I end up getting into some sort of a scalp long that catches my eye on the 5-minute, and then it ends up turning into a running position with the second half of my position. Those are basically the only two ways that I'll actually end up in a swing long position. Just catching up on the chat here a little bit. Love to see you guys here. Thanks for being here with me, by the way. Hopefully you're all surviving the storm. I know it's been volatile. I know it's been crazy, but if you're really able to zoom out and look at the structure for what it is, nothing other than the violence of what had happened there, other than how fast that happened, nothing structurally actually shocking happened there. Altcoins, that's a different story. That is a very different story with that whole liquidations event. Very different. But Bitcoin, it looks like very basic market structure to me. That's why I was short 2 days in advance, right? It's as much as we joke in the chat that I'm on Trump's intel list. No, I had no insight that there was going to be a tariff announcement. All I was looking at was, hey guys, we might be in a swing fail. I'm going to protect myself. And got into some beautiful shorts due to that. Something else I wanted to talk about, guys. I want to look at the weekly chart. I know I've talked about this on my last few streams, but basically looking at where we are on a time basis. I know everyone thinks that, hey, we're going to break the 4-year cycle this cycle. Honestly, we could. That's the thing. Once again, we're right on that make or break point where we are potentially forming a top. We are potentially right at the end of a 4-year cycle. We're starting to see some nasty structure here. And generally speaking, after we have a bull market that goes up for 152 weeks exactly, we end up eventually coming down and testing that liquidations band indicator. Notice that we saw it here. We saw it base here. We got very close. COVID, we hit it. Last bear market, we actually hit it a couple of times. That's just, it's very typical for Bitcoin to eventually pull back to that. It's kind of where the price is drawn to a little bit. And that's where we have a lot of people who don't want to accept even the possibility that this cycle could be over, just because so many people got wrecked. They think that, well, that has to be max pain right there. Saying that, we got a fresh flush from leverage and that sort of thing. On altcoins, yeah, you know what? Altcoins did get a flush. There was a big liquidation event. There was a big flush of leverage there. Very different than Bitcoin, but that would also fit into the narrative of maybe altcoins have their little fun at the end of the cycle while Bitcoin trades sideways or starts to sell off a little bit. Maybe we do see that with altcoins, but as far as Bitcoin, we did not see anywhere near that type of COVID level liquidation event, because at COVID, we came back and tested the liquidation band indicator. And as it stands right now on the weekly chart, we are currently 65% away from that liquidations band indicator. Again, we don't have to pull back to it right away by any means. But generally speaking, after the 4-year cycle, we pull back to that. Let's just look for a little bit of confluence with that. Let's pull a fib from our bear market bottom to where we've topped out. That liquidation band is right around my Stuber fib right now. A little bit of confluence that we could go down towards that level. And everyone's going to say, I shouldn't even say this, but that would start to target closer to $40,000, you guys. I'm not trying to scare you guys. I'm just trying to look at things with a level head and warn you for what could happen. And I know it feels like that can't possibly happen, Stu. Well, let's check every previous market cycle. Oh, hey, look, we went to the 786 before we started our bull market. Let's look at the cycle before. Oh, hey, look, we went right to the middle of the Stuber pocket before starting our bull market. Let's go to the first cycle. Oh, hey, look, the first cycle ended up bottoming out very close to the 886. So every single market cycle has respected the Stuber fibs. 90% of the trades that I take are the 5-minute based on that kind of structure. So a weekly would just obviously take much longer to play out. And again, guys, I'm not saying it has to happen again, right? That's the thing. That's the difference. I am willing to be wrong about this. If we end up blasting to the upside, that's fine. I'll be playing the longs on the pullbacks again if we start setting higher highs. But right now, even with I'm actually going to reload this chart just so I have that timing on there. Let's just look at this, you guys. As far as looking for order blocks or breaker blocks in this case, look at that block that we are currently losing on the weekly time frame. I mean, obviously the candle hasn't closed yet, but that is a very, very, very serious breaker block in my opinion, because if we're just looking at candle closes, right? We had our high here. We have our higher candle closes here. This was our order block that ended up pushing us through the previous highs. And now we are losing that level on a weekly as we are right at our 152-week timeline. Again, doesn't have to be the same, but there's just a lot of things lining up. And I don't want to be the guy to say that this cycle is different because my gut tells me so. Somebody on Twitter told me that this cycle is going to be different. So that's what I'm going to do, right? So just understand that basic market structure. All this needs to do is be invalidated, and I will be bullish again if we start closing higher highs and that sort of stuff. But as it stands right now, unfortunately, as I said, guys, we have a new swing fail pocket up to about 130K. And I think it's very possible that if we see a strong bounce, that we end up seeing another fake out and the same people will get wrecked on the same trade setup for the third time in a row. That's just, I mean, speaking of not going on gut feelings, that is just a gut feeling, obviously. We can invalidate that, right? If we get up into the swing fail pocket and we end up just blasting through, all right, I'll take my loss on that trade. That's fine. Losing trades, but having them managing losing trades is a part of trading, right? Invalidations, that's totally fine. But a lot of people aren't willing to be wrong, and that's what gets them in trouble. Their gut feeling is so strong that they don't necessarily want to protect themselves. And like I said, I got a message from a family member right before starting this stream, and everyone out there is saying that, oh, retail is broke, retail's not willing to buy anymore, that's why the max pain is over and we're going up from here. Family member messaged me right before the stream saying that my whole group of friends is leveraged long right now, thinking that the bottom is in, and they don't have stop losses and they don't read charts. Does that sound like retail is done trying? Just gotta check out some of the chat here. If we take 40K, I'm selling everything and live in a car and buy every sat I can. Yeah, man. Again, doesn't have to happen, but it's in the charts that it's at least a possibility. Just like on Friday or on last Thursday when I said 107K is maybe not probable, but possible. Same kind of thing, right? Still thinking we get another all-time high before the bear, but happy to be wrong. Yeah, and that's where I agree that, you know, we are starting to see that liquidity up around our all-time highs. So yeah, I wouldn't be opposed to grabbing another swing fail up there, because really the market makers are going to keep screwing with us as long as people are falling for it. Drew has been preparing for this. See, and that's great. I love to see that other people are, you know, preparing. That's the thing. As long as, like, it's so unfortunate, you guys. I know so many people got hurt who are using cross leverage in, especially on Binance. But just in general, people on cross leverage, sometimes worst case isn't always a stop loss. That's why I only use isolated leverage. That's also why I always keep my spot holdings on a different exchange than what I'm even trading on. I never keep everything in one place. Trump told me it's different. Yeah, me too. Actually, no. Remember, I'm on his intel. He told me this, so it's going to be the exact same as it always is. Because let's be real here, guys. If the government's actually bullish on something and they want more of it, why would they want to, pump everyone else's bags? Yeah, XRP going to $450. Well, guys, I already said a few times this cycle that if XRP breaks above $10 US this cycle, I would do a live stream of me writing down my words and eating them. Because and to be honest, that one's actually possible. But I've seen people calling for like 50,000 XRP. 60,000 was the most ridiculous that I saw. And it's like, you really think that they're going to print $6 quadrillion and throw it directly into XRP? Yeah, everyone wanted this cycle to be different, and then when it's different, everybody's complaining about it. It went the opposite way of the hopium that was that that saying was meant to be. Thoughts on ZEC? ZEC. I will check it out in uno momento. ZEC. Oh boy, that's an interesting chart. Yeah, I mean, it's getting close to potential support just because we have this potential support on the Trendmaster indicator on the 4-hour. This must be the big wick that you're talking about. So here's my problem with this structure, is actually, as far as microstructure goes, there was an uptrend that was broken, and it is micro, but we had a high here. We had a higher high here, and then we had a higher high here. This would have been our higher low. We lost that, and ever since we have now set a lower low, now another lower low, so we have a confirmed lower high here. So at this point, I'm not really looking for where the bottom of the trend is, because the range on the way up has broke on a micro scale there. So at this point, I would basically want to see a lower high taken out and then a retest. Like, let's say, I would feel better about something like this, right? Because break the lower high, get that pullback, and then carry on. I'd feel a lot better about that, to be honest. But I see what you're saying. It is possible that this is a bit of a warning. We end up going back down there, find support, sure. It's just, it's not really changing structure or anything. If that happens, we still have a bearish trend on the 4-hour. Yeah, and that's exactly it, Modesto. The thing is, these big guys can stay in their positions even if it goes to 45K, and they'll just buy more. That's exactly it, right? Retail is greedy. Retail needs to be in now. Well, you can see how retail reacts when you do get a sell-off. It's very painful, so you can tell that retail is not really ready for that scenario. Whereas the big players would, right? So it'd be silly for them to not try and push it there and get the panic selling way down, way too low, get an actual capitulation on Bitcoin, and then they can buy up the dip. But I wouldn't expect that for about a year or so. If it's going to be a typical 4-year cycle, obviously that can break. If XRP hits $10, Maz is gonna fly out to Canada and live in my island fort for a month. Yeah, I'll come visit you. I'll bring the supplies we need. Um, let's go back to Bitcoin here for a second. Yeah, see, still on the 5-minute. Notice that, yeah, we're having a hard time even getting up to my Stuber fib on the 5-minute. What's the Trendmaster doing? We're still holding the Trendmaster as resistance. Guys, that's another thing that I often talk about. One thing that led me to take short from up here the other day, well, obviously it was a Stuber fib, right? Same thing, same structure, right? Lose some highs, come back up, retest resistance. People get bullish into a perfect bull trap there, start laddering in, got into a position there. But the reason I started looking for that was actually using the Trendmaster, and this is my favorite MDX ALGO indicator. I use it every day, but it's not so much, guys, that I use every signal on its own, but I really like to notice which way these signals are trending, basically, and when there's a change in that. And something that caught my attention was this lower sell signal here. That was a warning to me that the trend may be shifting, so that's why I was using the highest point from this range as my resistance point to pull a bearish fib, basically. So using that confluence, right, I was looking at the market structure, but also using the indicator as confluence, so the market structure and the indicator line up with that. So that was a great trade to take in that case because of something like that. Also, the fact that before that, so we did have a higher buy signal, right? So that did look bullish, but look what happened as soon as we lost that pivot point, right? That was another bearish warning that we lost the higher buy. We created a lower sell. And then even when we got our next buy signal, it was a lower buy signal. And then after the bearish Stuber rejection, we got another lower sell signal confirming the trend, right? Here again, lower buy signal. That was a bit of a warning. And pulling a fib that matched the market structure to go with that. I keep going back to that pivot, but it was this one. But same thing, right? We had the market structure because we had our low, we had our lower low, and we have our confirmed lower high. So I pull a fib, and look at that. We also have lower buy signals on the Trendmaster for a little bit of confluence, and then off to the races to the downside. Currently still struggling with the resistance of that Trendmaster. So even at this point, if we end up getting, let's say, a new buy signal out of this indicator, something that I would be looking for at this point, basically, is so I have this as my micro range. This is the smallest range that I have on the 5-minute right now because, like I said earlier, low, lower low, lower high. If we end up breaking that smaller range, that's where I would start looking for the bigger range. And where is our last sell signal? It would be something like that. Because if we get a buy signal, it's a significantly lower buy signal, and I would start to look for resistance, basically, from our last pivot. So just kind of a little bit of a life hack for how I like to look for Fibonacci's and also bring the indicators into it. As well, guys, this is an option, the Algo Master, so that's another bit of confluence right there. The Algo Master with the auto Stuber fibs literally just printed the exact same fib setup that I have. Right? Exact same. And that's in your Algo Master. If you go into your settings, you can go down to auto fib levels and there's Stuber fibs. You can set up the colors however you want, obviously. But something to mention about this, guys, is I wouldn't completely rely on this because, again, I use indicators as confluence. I look at my own price action first. So I like it when it agrees with me. It's great to have that AI confluence. But sometimes it pulls fibs that I don't necessarily agree with, or they've already played out, or they've already been invalidated, and you don't notice the change. So always make sure that your eye is also lining up with it with something like that. But I love having that confluence, and just another reason why I would start to look for resistance if we end up getting pushed to the upside. Oh yes, the auto Stubers, they are a thing. But again, just at least understand why I pull them and understand how to pull them yourself and use it as confluence because it can, let's just check a couple time frames actually. Let's see. Algo Master, it has the exact same one I was just talking about. Boom, more confluence for the bearish scenario there, you guys. I didn't know that would be there, but yeah, it obviously agrees with me. So same thing, same Stuber fib zone, same swing fail zone. It's printing out everything the same that I have. So boom, big red flag right there. Let's see. Oh, the weekly, I don't have it on the weekly. But yeah. Just a couple of ways I like to use the indicators, you guys. Again, I always say that market structure is the most important thing. But from there, looking for those little bit of confluences, there's a couple of the indicators here that I really like to use. Specifically, yeah, the auto Stuber fibs on the Algo Master and the Trend Master indicator. Those are my two favorite that I bring up. Actually, and the liquidations. Man, there's a lot of good ones. But yeah, they can be strong confluence. Have an AI stew too. I hope so. I really wish that I knew how to set up a bot that was that complicated with meeting all my criteria and stuff like that. It's a little more complicated than setting up a bot with some signals. So unfortunately, no Stuber trade bot yet. Oh, hell yeah, I'd watch my own AI videos. I'd listen to what that guy has to say. But again, I would still look at my own charts and then I would use them as confluence. Like guys, I know a handful of I know quite a few very, very good traders now at this point, and I would still never blindly just take someone else's signal unless I agreed with it. Yeah. So yeah, basically, like I said, guys, as far as basic market structure on a scalping time frame, we have a fib something like this on the 5-minute. So basically, resistance, if we get up there, would be around 108.8 thousand up to 109.6 thousand. And then even if we break through that, the bigger range, we have resistance from basically 111K up to 112.7. So, and then if we want to go even further, then we obviously have resistance starting around 120.9 all the way up to 130. So basically what I'm saying at this point, you guys, just taking emotions out of it, taking out the news, taking out everything, just looking at the charts for what they are. No matter what, even if we do end up bullish here, Bitcoin just has a lot of work to do. There is so much resistance along the way, no matter how you look at it, that I just don't think it's going to be an easy ride. Do I take high time frame setups or only low time frame with high time frame confluence? No, I trade both sometimes. Like that long that I took on Bitcoin before we ended up getting that dump, right? I was talking about this Stuber an awful lot when we started trading down towards it. Actually, guys, so this is another thing where I think we were on stream right around this level, and I was warning that, hey, you know, although things still look good, you know, we're still holding our micro uptrend here. If this was a 5-minute chart, I wouldn't be looking for longs unless we dropped to at least my Stuber fib on this type of structure. And everyone was thinking that, no, we can't go back down to those levels, and if we do, it's super bearish. And it was like, well, no, because I treat the 5-minute and the 4-hour and everything the same, and I have a very, very, very systematic trade setup. I was laddering into this on, and basically I had entries at basically my 786, my 886, which were the only two that triggered. My average entry was somewhere right in the middle. I think it was like 108 at 0.9, I think is what it was. It's obviously gone now. Yeah, it was around 108.9 thousand, so right in the middle of that Stuber fib. But I had more entries that I had laddered in case we got that break down into that swing fail zone. And if that would have got stopped out, whatever, my average entry would have ended up somewhere in here, and life goes on. But no, I will trade. I will do the odd swing trade if I see something really obvious on a 4 hour like that. But usually I end up on the shorter time frames and start looking for the higher leverage stuff as well. I ladder in entries from the 1 to the 115 because the 115 is my invalidation. So if the price comes down here, I want to help my entry. So that's actually combining two strategies. Like the Stuber fib itself is the 786 to the 886 because generally in a strong trend, that's where we see the reversal like that. But so often, especially in volatile times like this, we see those swing fails, right? And so I'm actually laddering into basically combining those two strategies of a Stuber fib as well as a swing fail. But that goes for the 5 minute as well. I always ladder in entries real close to my invalidation just to help that entry if possible. How do I determine size or levels? Size, I mean, I just trade what I'm comfortable with. I find out, I have a general idea of where my average entry is going to be and how far my invalidation will be. So I always kind of just do a rough estimate in my head how much I'm willing to lose kind of a thing, and that'll determine the size of position. And also, depending how volatile it is and how risky I feel like the situation is, sometimes I'll do 25, 25, 25, 25%, obviously. Something like that, just to keep it easy and, just even. But if I feel like it's a riskier setup, I'll even often go like 20%, 20%, 30%, 30%. Or let's say 20, 20, 20, something like that. Depends on the setup. If I'm feeling risky or I feel like it's a risky position, I will put my heavier entries closer to invalidation just so that it just helps the risk reward basically. Student ovations. Yeah, I like it. Yeah, that's the thing. I mean, I've been trading that way for quite a while, looking at swing fails and stuff as well. So, I mean, that's the thing, right? With the way the markets adapt or the way the markets change, you just kind of got to adapt a little bit. So I just started, it's an ongoing thing, right? Sometimes you just notice things and you start dialing things in and making slight adjustments. So the 5 minutes still just struggling here, you guys. Which I love to see. Don't get me wrong. A parabolic bull market would be a ton of fun, you guys. I would have so much fun. I would love all my meme coins and altcoins to go to the moon. Don't get me wrong. I would love it just like everyone else would. But I also am a realist. I'm very good at keeping a level head. I am very good at keeping my emotions at bay. And that leads me to just trade the chart for what it is, because I also treat my investments much different than my trading account, right? Just because I still hold spot doesn't mean that I'm going against my religion by taking a short on Bitcoin, right? Like, I treat my trading account and my investment accounts very differently. I bought some of the dip even though I'm bearish. Why not? Take some short profits, buy some troll coin. Why not? But yeah, guys, that's kind of the majority of what I wanted to go over. Just kind of a little different, not doing so many altcoin requests today. I was more so going for, just really there's so much emotions going on right now. I want to try and get everybody to keep a level head, because things are dangerous right now. Things are very volatile. They're very emotional. And I thought that we just needed to do a good breakdown of looking at market structure for what it is and how important it is. And, some of the ways that I use some of the indicators as confluence like that, it can go a long way, right? There's so many people with very large accounts on Twitter, for example, who are claiming that move was unpredictable. Well, I gave you a bunch of reasons why I ended up shorting it 2 days in advance. Yeah, I didn't know that violent move was going to happen within a few hours, but I absolutely expected the move to happen in general, because there was reasons suggesting there was liquidity to grab, as well as the market structure, right? Just trading it for what it is. Market structure can go a long way. And again, guys, if you are feeling emotional, like you don't know what to do with trading, please, I know it's not sexy and it's not fun and it seems like homework. Backtest. It's literally the most important thing that you should do as a trader, and almost nobody does it, because someone would way rather lose 10 grand than to put 10 hours into backtesting. It's crazy. When I started trading, first of all, I wasn't even using leverage. I learned how to spot trade before I could leverage trade. But on top of that, I was also backtesting probably 5 to 6 hours a week. I would go back on Tradingview and I would use the replay function, and I would go back and backtest years of charts. If I thought that I had a new trade setup I wanted to trade, I would go back and basically backtest at least 2 or 3 years, and to find out kind of what a general, have a big basket of examples and find out what your probabilities are. Again, I never went back and checked what was in the news at the time those setups were happening. I never went back and checked Twitter. I didn't care. I'm just looking at the chart, and that's what I'm backtesting, and that's what's supposed to keep us with a level head, and to just trade the charts for what they are, right? So again, I'm not saying that I can't be wrong on my bearish theories. I absolutely can, but that's where backtesting, again, that's why I have invalidations. At this point, if we bounce, okay, I'll lock in some more profits on my short, and then my bags go to all-time highs. Great. If we end up dumping from here, my trading account's going to be very happy. So win-win. So with that, my friends, hopefully you guys did find this stream useful. And for those of you who are watching this on my YouTube channel a little later, if you want access to the MDX ALGO indicators that I use each and every day, there's a 10% discount link in the description down below. And as well, check out my new crypto channel. You guys, maybe, I don't know if all of you guys have seen it yet, but I did start a new crypto trading channel, literally called the Crypto Trading Channel. I live stream there publicly almost every day at this point. Very new channel, so do me a favor, go subscribe to that. Doing lots of these live streams, you guys. So yeah, get in there as well. Very excited about that one. That one's a fun one. Mostly just like 20-25 minute live streams on the daily almost. So yeah, do yourselves a favor if you like my content, and subscribe so you don't miss those. With that, my friends, I'm out. Stay safe out there. Peace.